very important seminar that we're giving. It's about credit, debt, and how everything affects your job, marketability. And we are so happy to have the people that's on this panel. We have, first of all, Ms. Sabrina Lamb. Ms. Sabrina Lamb is a noted authoress. I first met her. She doesn't remember this, but she did a presentation, a book signing at Marvel's Human Bookstore on 125th Street, where they had that Human store. And she has done marvelous. She's internationally known. She was a nominee for the NAACP Image Award for one of her new books, which is Do I Look Like an ATM? And this is a very important book because it talks about finances to the children, to the young people. And you know, nobody is talking to our youth about finances. So the earlier we start, the better off we are. And she has blessed us with bringing some books with her, and they'll be right on that table after we conclude. The other members of our Economic Development Committee, Ms. Pat Smalls, if she would raise her hand. She is a business owner, a CPA, one of my colleagues, and she has been in business for a while, and she's an excellent tax authority. The other members of our panel, of our Economic Development Committee, are Ms. Joyce Green, who is upstairs making some copies for us, and Ms. Jamie Morgan, who is also upstairs. Without further ado, we're going to have Ms. Sabrina Lamb introduce our guest speaker.
So good evening, everyone.
Good evening.
Good evening. So I'm the founder and the CEO of an organization called worldofmoney.org. It is an organization, a 501c3 charity dedicated specifically to the financial education of our children, starting at age 7 to 18. Every June, we have a Parent Money Matters Forum. And when I created the organization, I was a regular commentator on KISS FM and WBLS and sometimes Hot 97. And I started hearing the voice of this gentleman sitting to my right as he advised millions and millions of listeners who would call in on this thing called credit. And it's been my experience that money is often in our community the last issue that we think of, except when there's a hiccup. Oops, now we got to be concerned. Or we're so emotionally devastated or intimidated or saddened or whatever the toxic emotion is that we're afraid to look into the soul of our financial status, the soul of it. And so I'm always reminded that we always, you know, in church pews throughout America, African Americans are singing "God Bless the Child Who Have His Own," you know, but we're not living it because the ownership is credit, and our integrity as owners and purveyors of this thing called money. I've often said it is the most powerful currency on the planet, besides, in addition to love and whatever religious practice that you have. But most people are just not fluent in this thing called credit. I've often also said that what you don't know about credit will hurt you, and what you don't know about your credit report, your creditors love that you don't know. So this gentleman to our right, his name is D. Alexander Washington. He came up here all the way from Philadelphia. And he's been teaching at World of Money for the last, I would say, 5 years, to a packed house. Every year it's a packed house. And people are leaned in because they're trying to clean up credit, and it's not going away. And there's things that no one's going to, issues that individuals or creditors are not going to knock on your door and say, you really need to know this. So it's good that we have this group because we can really get into it. But first, would you please give a warm welcome all the way from Philadelphia, the CEO of CreditMinded.com, Mr. D. Alexander Washington. So we're going to do a Q&A, then we're going to hear from you, and then you can have individual conversations, you can follow up with him. But the purpose, the action steps from this conversation tonight is that your credit improves as a result of what you learned tonight, okay? So what is the first mistake or misunderstanding that most people have with regard to their credit report?
Okay. Well, first let me say this. You're founding CEO of World of Money. I'm founder, CEO of Where the World Is My Money. That's what set me on this path to really understanding the relationship between your income and credit. I was fortunate to grow up in a very entrepreneurial family. And because of that, I never had the opportunity to look at money as something you just spend. Because the conversations around the dinner tables at my grandparents was, you know, we had a good weekend, we got some extra money. Pepsi says if I buy 25 cases of soda, I can get 10 cases free. So I was always in the atmosphere of how money was a tool, a commodity to help increase making more money. Relatives had nice houses, nice cars, but we worked a lot. You know, from the age of 13 when I opened my first store to the age of 27 when I went to work for New York Life, all I knew was work. But things happen in life that really causes you to take a real hard look at things. And when I did that, I realized, especially when I went to work for New York Life, going into the neighborhoods, how people just really didn't understand the philosophy of money. And that money is what the foundation that supports credit. You have to have them both. Credit is, your credit report demonstrates your willingness to repay debt. But if you have an 850 credit score and you don't have any money, you don't have a way to demonstrate an ability to repay debt. So somewhere I understood that there has to be a correlation between credit and money. And when I talk to clients initially, I tell them my process is a two-step process. We want to look at the credit report so we can show lenders how you deal with your responsibilities of paying debt. And then we have to show them your ability to deal with the debt. And I have clients in two categories, ones who can't and ones who don't. The ones who can't pay their debt, lenders are more willing to understand your financial difficulties. The ones who don't pay their debt, well, no one's going to be responsible for you. So what is credit? If somebody said, what's the nickname for Robert, what would you say? If somebody asked, well, what's the nickname for William, what would you say?
Good.
Well, what's the nickname for credit?
Money.
No. There you go. Because once you use it, you're in debt. You'll never hear a bank say, come on down and get $15,000 worth of debt.
Yeah, right.
They'll say, come on down and get $15,000 for credit. But once you use it, is debt. The trick, I don't really want to call it a trick, because banks generally lend to business people. When banking first evolved, they lent to business people. Those are the ones who needed to borrow money. And they worked off of their gross income. Now, employees, you still work off your gross income. Because after Uncle Sam takes his tax out, what you left is a little gross. So, but the banks lend you money based on your gross income. And nobody lives off of gross income. So that's the first hurdle. During the heyday of the mortgage industry, I was doing mortgages, but I'm a licensed financial planner. So even though I was working for a mortgage banker, when clients came in and they had $30,000 of gross income and they wanted a $500,000 house and they could get it because they had a negative AM mortgage that the lender was offering, I would turn them down. I was like, no, I'm not going to give it to you. Well, the guy down the street said, I can take this mortgage because in 2 years, when the rate go up to 100%, I can refinance it back down. And what happened? the bottom fell out the property, so now they owe more than the house is worth. They can't refinance. Their mortgage payment went from $800 to $1,400. They lost the house. And all my associates in the business that was laughing at me and saying, "Oh, Darell, you scared of money." I'm laughing at them now because I got to work them out of their credit financial issues because they had to file bankruptcy because they were making all this money. They were living on the money. The market crashed. They didn't no longer have the money. So credit is very important. It's quicksand if you don't understand it. Now, when a client comes to me, the first thing I want them to do is pull a credit report. And what I'm doing now, I'm actually having them apply for something. I don't care how good or bad they say their credit is. Apply for something just prior to pulling your credit report. Because I want to see if they have inquiries on the credit report, because that lets me know everything on the credit report is current. So if you apply for something today and pull your credit right after, and that inquiry is there, I know everything's on the credit report is current. And I look for key indicators. Now, some people think I'm looking for negative information from a standpoint of what was paid late, what's overdue, what's been repoed, what's been charged off. The most negative information in your credit report is high credit balances. When you're carrying a balance in excess from, and different people will give you a different percentage, but the reality is, I find if you're carrying more than 20% of your available credit, even if you're making your payments on time, you're still going to have a negative credit utilization factor. So if you have to carry...
Repeat that one more time.
If you're carrying in excess of 20% of your credit limit and you're paying payments on time, you're still going to have a negative credit utilization factor.
Everybody got that?
So that's the first thing. This kind of telling the system you can't manage your debt. Technically, you shouldn't have a credit balance on a credit card. Credit cards were never intended to be used to carry a balance. Before they were credit cards, they were charge cards, and you had to pay them off at the end of the month. Somebody said, well, let them carry debt and we just charge them interest. And then they just got sophisticated with it. You leave $1 of a previous payment history charge on your credit report. The next time you charge that card, what the credit card company do is charge you the full interest on that prior charge before they apply anything to the new charge. I was doing my radio show and I said I would take a credit card with, first I say credit card companies don't charge interest for using the card. And a couple people didn't like this, said that I didn't know what I was talking about. Then I said I would take a credit card if it gave me the right limit with a 50% credit, with a 50% interest rate. And then people said that was crazy. Well, most credit cards come with a 25-day grace period. So if it has a 50% interest rate, but it gives me a credit limit I know I can use in that 25 days and pay it back, what I care, I'm not paying any interest. So that they came back and said, well, if they're not charging you interest, how do they make money on the credit card? It's called merchant service. Every time a merchant swipes the card, they have to pay the issuer of that card a percentage, on average 3%. So that's how the credit card companies make money. I did a whole series on MasterCard and Visa, the billions of dollars in transactions and the millions of dollars in profits they make just from the credit card transaction. So that was the purpose of the credit card. It wasn't the purpose of consumers carrying a balance. I had a client in New York, he had a $40,000 loan with, no, he had an $8,000 loan with Bank of America on a revolving line of credit. He settled some lawsuit for $40,000. He called me and he said, I got this $40,000, I owe Bank of America $8,000, should I pay it? I said, yes, and hung up. He called me back. He's like, why should I pay it? I said, because you owe it, and I hung up. So he called me back again. He said, why don't I just keep making payments on it? I said, because you can never earn as much on that $40,000 as it cost you to carry that $8,000. I said, there's a line of credit. If you need $8,000 for some reason, pull it back down again. Why pay interest on it?
Let's go back to the credit report.
Okay.
Everyone in here has a credit report. And you've talked about over the years, the 3 credit agencies.
Right.
name them, but there's another not even an agency that you use to review, when reviewing someone's credit report, so to speak. Could you talk about that? And how, if Michelle is here, but if Michelle is spelling her name with 2 L's, and there's another Michelle with 1 L, she has to make sure that it's everything to the letter, the address is correct. Talk about that, and that there's the Equifax, TransUnion, and Experian. But there's another one.
There's not another, well, there's over 2,000 bureaus.
What? I didn't know about
Yeah,
that.
there's over 2,000 repositories. TransUnion, Equifax, and Experian is Pepsi, Coke, and 7-Up. But there's over 2,000 repositories, but the most banks use the top 3.
Banks and other
institutions use the top 3.
Okay.
But I deal with a lot of other institutions that use some of the other ones. But yeah, those are the top 3. But you have 4 credit scores. You have your Beacon, your Imperial, and your FICO.
Repeat that.
You have your Beacon, Imperial, and FICO. Now, the 4th score you don't see. The only person who sees this score is the underwriter or the lender or the credit analyst. This is called a bankruptcy probability score, but the consumer never sees it.
Whoa.
I know about it because I have clients that are underwriters and credit analysts. So they explain what their job is to me as part of the process of understanding how I can assist them. But those are the 3 scores, and you have this bankruptcy probability score. The higher that number, the more likely the bank will decline you, even if you have good credit and good income. And that's a factor of a number of things. It could be a factor of industries that's downsizing. It could be whatever the average industry is bringing in. If they see a reduction based on Wall Street or whatever combination of factors they use, that develops a number for them. So it may not have nothing to do with you specifically. You could just be working in an industry that they feel your longevity may not be there sufficient enough to repay the loan. Like, let's say a mortgage, which is a 30-year mortgage, which is on a different matrix for approval than a car loan.
Okay, we're back with the credit report. You talked about those 4 measures. There's hundreds of agencies, but with that now, if you, for example, a creditor, it's called Macy's, for example, there's a limit of time, a statute of limitations by which that information should no longer be on that credit report, and that our audience, our attendees, should challenge those.
Okay.
Talk about those.
Because this is one of the most misunderstood aspects of the statute relative to the subscriber, which is Macy's, for the sake of conversation. Macy's will contract with the 3 credit bureaus to report their customers' use of credit. They can contract to report it every 90 days, every 60 days, or every 30 days. The more frequently they report, the more it costs them. What the statute says, if they let an account sit dormant for up to 7 years, it can no longer be reported. It has to sit dormant, but that's Macy's letting it sit dormant. Once it goes into a collection status, now that's state regulated on the statute of limitation. In some states, you have up to 4 years to sue someone. In other states, you have up to 6 years to sue someone. So that becomes state regulated under the Fair Debt Collection and Reporting Practice Act. The negative information on the credit report falls under the Federal Trade Commission Fair Credit Reporting Act. So we're talking 2 different things. The compliance under the Fair Credit Reporting Act, which is federally regulated on information being reported. There's 22 statutes and 122 sub-statutes. But that's for the listing of the information. If the 6 key statutes, information cannot be listed if it's in error, incorrect, inaccurate, obsolete, biased, or was never contracted to be reported. Those are the 6 key statutes.
How many of you have any of those on your credit report now? Any of those issues on your credit report now? Obsolete.
In error, incorrect, obsolete.
It is weighing down your credit score.
It's weighing down the credit score.
Even student loans?
Oh, student loans are the worst. But they're the worst because they will throw that information on the credit report quickly. However, they're the easiest to rehabilitate and have adjusted. Those, I tell clients right from the door, I can't guarantee to move a student loan off a credit report. I do get them off, but if you still owe, I get off the information that's already there. But if you don't make the payment that next month, that next one's going to come. So the old stuff is gone, the next one's there. Same with a car loan, same with a mortgage. And that's why I tell clients, when you want to go repair your credit, the first thing you have to do is stop the bleeding. Until you stop the bleeding, there's nothing I can do, because I get rid of everything that's there, but you still not paying current debt. Negative stuff's going to come back, because I can't get rid of something that's not already there.
How do you challenge obsolete? How does John Jones challenge, wow, this is from 1981, and they haven't said anything to me, and I haven't said anything to them. So what do we do?
Well,
I'm trying to buy a house now. What would you?
well, the statute says you have to contact the subscriber, and if they don't respond within 30 days, then you can have it removed.
Oh, what about, like, I know years ago, they did report, library debt.
They
What
do
about
that.
library cards now?
They do that.
Library.
Yeah.
They didn't do that years ago,
They
but
do
they
it
do it
now.
now.
They do it now. But any negative information can be challenged. I actually have clients now who are challenging student loans, and they're having them discharged in a bankruptcy, which generally you can't have a student loan discharged in a bankruptcy. But if the trustee requests a verification that that student loan actually belonged to you, and the collection service or the Department of Education does not respond in the time the federal court gives them, the court will discharge it.
You know why? Too, all right, look at the crises that we're in today. The jobs that were here at one point in time are now all outsourced to other places. We don't have jobs here to pay anything. If your job is gone, how do you pay? What do you do?
Well, you have to adjust. You have to understand, in a free society, you're going to have haves and have-nots. The only way you're going to get 100% employment is if we go communist. It's going to be that way. That's why managing your resources is so important. You know, you want to be in a position where you can have credit, but you want to make sure that the credit that you use, you can repay. You know, and sometimes you take chances. You know, I never had a job. You know, I worked for a family. They trained me, and as I said, from the age of 13, I had my own business and kept that until I went into financial services. But it was a reason I went into financial services. You have to put yourself in a position, and I'm doing this now with clients who are like 5 years away from retirement, and that's the question: do you want to retire in debt, or do you want to retire without debt? Now, there is good debt and there is bad debt. For me, mortgages is a good debt, especially on investment properties, because you got your depreciation, you got your earned interest credit, you got any maintenance. So you can actually make money from real estate and reduce your tax liability at the same time. So there is certain things you want to look at, but the earlier you start, the better off you are. You know, and I know we're talking about credit, but credit is a byproduct of your finances. And like my little nephews and nieces, like, well, why did you get out the store business? You were doing so good. Well, I had a daughter. I know it's a little off topic, but this is the way you look at using money. I had a daughter. Her mother wanted a house. And I'm like, okay, I had a friend who was an insurance agent, and we're talking and everything. And I said, one day we were out, and I said, I want to make sure I can pay my house off, and if I die, my daughter has some money. So we looked at some numbers, and I bought a whole life insurance policy. And I talked to a lot of other finance people. They said, oh, whole life is a waste of money, get term, get this, get that. But what I did, I looked at my amortization on my mortgage. And I looked at the illustration for the whole life insurance policy. And I saw in the 17th year, there was more money in my life insurance policy than I owed on my mortgage. So I called my insurance agent and I said, Luther, I said, can I take this money out of my insurance policy and pay my mortgage off? And he's a little sarcastic, funny guy. He's like, it's your money, why not? I said, I can? He's like, yeah. I said, well, in the 18th year, I said, there's more money in my life insurance. I said, it's really equal to what my mortgage payment is. I said, well, my mortgage is paid off. What can I do with that money? He said, it's your money. What you want to do with it? I said, can I put it in my pocket? He said, yeah, you can put it in your pocket. So I'm sitting there thinking, I just gave myself a raise. My mortgage is paid off, and I can now take money out of my insurance tax-free. So in 30 years, my house don't cost me anything. I said, I called him back. I said, is this legal? He said, yeah. I sold 3 of my stores off, gave the 4th store to my brother, and just battered New York Life to let me come to work for them.
What was the length of time that your whole life policy grew to?
17 years.
17 years. Okay.
Right. I matched it up. I actually won my first, while I was in training with New York Life, marketing, I created a program called MAP, Mortgage Amortization Program. And I didn't know anything about selling insurance. But I knew if I doubled the amount of the mortgage, I had enough money to pay the house off and have a death benefit for whoever I wanted to, person I wanted for. But I knew the math would resolve the debt and pay me a residual income that I can't outlive. Now that's the other thing. No other institution but an insurance company can guarantee your life income. Any other institution can only pay you for a time certain or an amount certain. But once you convert your accumulation into income with an insurance company, they pay you as long as you're living, even if you exceed the amount you accumulated. The insurance company is the only one who can do it. Now they have a foundation, because you can pop that policy, which is a premium offset provision. You can pop the policy, let the money grow. So you actually have, and what I created, what I called was a pre-post retirement death benefit. Pre-post retirement death benefit. Retirement, you got an income. At death, it becomes a death benefit. So you're covering like 5 areas of your life with $1. With $1. So, but now, your credit. You need credit because you want to buy a house. Because most people, that's the largest single purchase that they want to do. The higher your credit score, the more options you have on financing. You have all your traditional financing. Right now, for the mortgage industry, you need a 640 credit score.
And the lower the interest on that loan,
Well,
the higher your credit score.
Not necessarily.
No?
No, you will get the prevailing interest rate, which is about 4.5, 4.75. That's about the average interest rate.
Because I've seen it higher when that person's credit score is lower.
Well, somebody's got a yield spread in there on you. But the average rate, and you can go to the Wall Street Journal on Sunday, you can see what the rates are, and you go with whoever's offering the lowest rate. Now, there are niche products out there for jumbo loans. Now, they may be a little higher.
Right.
New
And they
York,
come after our community, typically.
Well, no.
They're marketed to our community.
Well, jumbo loans is the value. The house is over 417. You're in jumbo, so you're in a different market. So that's why the rate is different, because that's a different market. That's a different value. Now, New York has high values, but New York values, you can go FHA if the value is over 417 if the market bears it. So there's other homes in the area. I just worked with a client, did something in New York for a 7-something home, and they were doing an FHA. I said, I didn't think you can do it, but all the houses in the area was 7-something. So the FHA approved it at 3.25%, 3.5% down.
Everyone knows what FHA is?
Federal Housing Administration.
Okay. To my member's question, you're trying to get your money together. You don't have the money to pay off all your debts.
Right.
How do you negotiate with, let's say you owe $400, but you only have, if you pay $1 a month, can that keep your credit score or your credit health alive as opposed to paying nothing?
You call it mitigation.
Okay.
Yeah, mitigate.
Mitigation.
First thing you have to do is a budget. If you're living without a budget, you're flying an airplane with the engines just died with no parachutes. At some point, you're going to crash. You have to have a budget. Budget's real simple. Based on your bring home pay, 10, 10, 10, 35, 35.
But how do you negotiate with that? Sorry. Okay.
First, you want to do the budget.
All them up, yeah.
10, 10, 10, 35, 35. 35% of your bring-home pay you use to retire consumer debt. Now, let's say you owe 10 creditors. Forget how much you owe them, doesn't matter. But your 35% is $500. And you owe 10 creditors. They could be delinquent, they could be on time, they could be, doesn't matter. You divide 10 into that 35% because you owe 10 creditors. So each creditor gets $50. But you have to attach a letter. And you say, enclosed, please find $50, which is the amount I can pay till this debt is paid off, or my income improves and I can pay more money. If for any reason this is not acceptable, return my check within 10 business days. Now this is really good if the debt's delinquent. Now, I also suggest the clients on the back of the check write, by cashing this check, you agree to delete and or not report any negative information to any credit bureau.
Repeat that. Do that again. Do that
putting
again.
them in the contract.
That creates a contract.
Repeat, and they probably won't read it. Repeat that. Repeat that.
By accepting this check, you agree to delete and or not report any negative information to any credit bureau. They cash that check, and so you cannot negate a written agreement verbally, and that's a problem most people make with trying to talk to these people on the phone.
Right. There's no track record, there's no paper
Right.
trail, there's no...
Or let them do a bank debit, or, no, you want to write the check, and in the memo, if you're paying it off in full, paid in full. If you're making it in payments, one of however many payments you're making. Now, theoretically, when you go through the mitigation and you make your budget and you divide the number of creditors that you owe into that 35%, you may be paying some creditors more than the payment they're entitled to. That just means you're going to pay them off sooner. So now you're going to have, in a shorter period of time, you're going to be paying, you're going to divide 8 into 35. Then you're going to divide 5 into 35, and so forth and so on. It's a mathematical way of knocking it down. I mean, I have clients, a doctor, she owed American Express $50,000. I mitigated it down to $15,000, $25 a month, and they're not reporting it on their credit report.
Where's I see on television, annualcreditreport.com, free credit report. Where's the best place to get a free credit report and accurate credit, your accurate credit report?
Well, you can't have all of that.
Okay.
You can't have free and accurate. Free, accurate, you get one bureau. No, where you want to go is scoresense.com. Scoresense.com. They'll charge you a refundable fee of $1, but they give you your 3 scores and your 3 bureaus.
Is that SENSE?
Yes,
Or-
SENSE. Yeah, SENSE. Scoresense.com. For a refundable fee of $1, you get your 3 scores and your 3 bureaus. And that's what you want to do. You want to get that credit report, and you want to start from the top down. You want to look at how your name is spelled, if they're listing any AKAs, if they're listing addresses that you never lived at, if they're listing employment that you never worked at. You want to make sure they're not listing more than one social security number. Although I got 3, you want to make sure if you have more than one, you can have as many social security numbers as you want.
Is that right?
You can have as many names as you want. You just can't use them for illegal purposes.
So then
Well,
what happens?
speak.
No matter which social security number I use, the same information comes up on my credit report. And when I get my statement of social security benefits, all 3 are listed with the benefits I get.
How do you even get a second one?
Well, when I was born, I didn't do it on purpose. When I was born, the hospital gave my parents a social security number. When I got in 11th grade, I went under something called work education. To get a job, you had to get your working papers and so forth. I went to the Social Security Administration.
And
They gave me one. When I contracted with New York Life, they inverted my last 2 numbers.
Also to that point, is there any way, because, with all this identity theft going around, how, right, since I've been a little delinquent, I have to get a updated credit. But how do you trigger in to see if, they're doing some of everything? And
How do you protect yourself from identity theft?
Right.
LifeLock.
got credit, yeah.
Well, you can do LifeLock. You can monitor your own credit if you want. It's going to cost you about the same either way. Lifeline will give you up to $1 million to restore your credit if you just do credit monitoring and there's a breach in your identity. That's all, everything's on you, and it can be very challenging. But you just follow the steps. 99% of the time, identity theft is caused by someone who knows you. I had a young lady call me, and she said there's her mother got a credit card in her name, charged up to $4,000, and it went into charge-off. I said, "Are you ready to prosecute your mother?" She said, "No." I said, "Then you got to pay it. Credit card company will take the loss, but if you have to file a fraud report with the police department, then you have to agree to participate in prosecuting the person if caught to get that resolved. But most times it's somebody who know you.
When should you co-sign a
Never.
credit?
Never.
Okay, thank you. I love this audience.
Ready to go like that?
Talk about the,
All right, next question.
You know when you say that people always start up debt, talk about the fiduciary obligation to debt.
Well, see, you shouldn't co-sign for someone, but if it's like, if you have a child, let's say going off to college, and the college allow them to have a car, just buy the car or finance the car. Don't co-sign, because the co-signer is more responsible than the signer. So when family members, and I say this a lot on my radio show, family member come to me and say, "Can you loan me money to pay my electric bill?" I say no, because if you can't pay your electric bill, next month, how you gonna pay me? Yes.
How do you get something off of your credit report? I ran my credit report and I found an item on there from something I returned. I had actually gone, there used to be a store called the Darell store, which was a furniture store on the avenue.
Yeah.
I actually went in to buy a piece of furniture,
Right.
changed my mind about the piece of
Right.
furniture. They gave me the credit for the piece of furniture.
Right.
So they gave me a slip that said you have credit, you can use whatever. And it ends up on my credit report as if I didn't pay for the piece of furniture.
Well, you didn't.
But
How did she get it off her credit?
Well, I have to see how it's listed, and that'll tell me. But if it's listed in the negative, if it's listed in the negative and it's inaccurate, it can be taken off. And it sounds like if you have a credit slip, I would write a letter to the
But
company.
they don't exist anymore.
Okay, then I would write a letter to the credit bureaus that's reporting it, attach the credit slip showing that it was a reverse transaction and you had no liability to the debt. Now here's the good thing. Clients say, "Oh, Mr. Washington, can you guarantee after I pay you will get all this information off my credit report?" And jokingly I say, "Well, you really don't want me to." The statute says it's the consumer's responsibility to address the issues before you file for a money claim. You can actually sue the credit bureaus when they don't follow the statutes, and you sue them in federal court, so it doesn't cost you any money. You can get up to $500 or up to $1,000 for each violation. I actually worked with an attorney while she was on bed rest. She was expecting a child. She was on bed rest. Collectors was calling her while she was laying in bed on bed rest. She noticed all these inaccuracies on her credit report, and she made $75,000 just suing creditors.
Well, what about, let's go back to the guaranteeing for someone or co-signing. What about in the instance of your adult child for rent, which is on your credit reports now? Landlords in this city put it on the credit reports.
All of them do.
Or guarantee, and you do want them to get out your house. Or
you gotta want to pay that rent.
right. Oh, or student loans. How does a parent who loves what do you do?
You can't escape that. I talk about this on my radio show. There's a reason your heart is where it's at. Your heart is halfway between your brain and your butt. You follow your head.
Yes.
Your heart's gonna hurt. You follow your head. Your heart's gonna hurt. You follow your heart. Your butt gonna hurt. Your heart is halfway between your brain and your butt.
Okay. Is there any? Go ahead. Yeah. No, go ahead.
There's a certain thing, now I'm with the student loan thing, because,
Well, student loans are good now. Obama did a really good thing. Up to October of last year, there were 16 collection services contracted with the government to collect student loans. Well, no, there was 40 collection services contracted to collect student loans. They were being paid 16% of the outstanding balance if they got a large, and that wasn't defined, but they had to get a large deposit to reinstate the student loan. If they didn't get a large deposit, they only got paid $150 to manage the collection. Obama changed that. The 40 collection agencies now only get 11% of the outstanding balance, and they can reinstate you for as little as $5. And now your monthly payment is income regulated. The less you make, the less you have to pay.
That's why I told my daughter.
But you had a question.
About the student loan.
And what's your question? And how do we fix your situation?
It's being dealt with now. That's what I'm coming to you with. They have something called a forgiveness loan, and it seems that I do qualify for that now.
What area do you work in? What field of work?
Education.
Yeah,
Right.
yeah.
So it looks like now I'm being forwarded to this forgiveness.
Yeah, there are certain industries now that your student loans can be forgiven.
Oh, my.
What other
Did you
industries?
know what that's-
Education, nursing,
I think it's nursing, police, fire,
Peace
Yeah.
Corps,
something like that.
something.
Does the amount have anything to do with the forgiveness?
No, it's what the area that you work in.
Okay.
When is bankruptcy an option? Bankruptcy filing.
Bankruptcy is an option when you find you're not able to meet your financial obligations. That's when bankruptcy is an option. And I tell people a lot, bankruptcy is probably the best option. Like, they come to me and want me to fix the credit. Okay, fine. I said, but sometimes going through the bankruptcy, especially in Chapter 7, I work with Ron McNeil, attorney in Philly. He created his own bankruptcy statute called Statute 20, which is a combination of a 7 and a 13. So what he does your 7 first, get rid of all your unsecured stuff, and then he only takes what he have to for secured, because most people default on Chapter 13 because it's causing you to pay more money. You already can't pay your bills, but when you file the 13, you still got to pay your regular bills and the 13. So it kind of like puts you in a bad. So I tell clients, unless you see a lump sum of money coming from somewhere, the 13 may not be the best option. But the Chapter 7 is good. We take people through Chapter 7. They're out in 91 days after the papers are filed with the court. And the day I see the discharge paper, I give them 2 credit cards.
Now, that's a myth.
I just wanted to ask,
Yeah,
what's
go
the
ahead.
difference between a Chapter 7 and a Chapter 13?
Chapter 7 is called a clean slate. All your debt is forgiven. You don't have to worry about it. It's gone. Chapter 13 means you want to keep these assets and you continue to pay for them.
Well, wait a minute. Now, keep the assets. What does he have to give up in terms of his assets to make that Chapter 7 be successful?
Chapter 7 is even though it's a federal, it's still county by county. I had 2 clients, both had Lexus trucks. My client in New York had to give up her truck because under her 7, she was only allowed to keep 25% in assets. My client in New Jersey was allowed to keep her truck. So even though it's federal, you still have some county laws that kick in.
Can you buy a house if you have bankruptcy on your, and what's the window of time after you have filed bankruptcy that you can purchase property?
Under the new statute that Obama put out called Fresh Start, after 1 year of discharge from a Chapter 7 and establishing new credit, you can buy a house. And in Chapter 13, after 13 on-time payments, with trustee approval, you can get a mortgage.
Wow.
Whoa.
Everybody hear that?
Yes.
Mr. Washington?
Yes.
I have a question. My daughter got involved with that predatory lending that with the real estate.
Mhm.
Okay, it's not finalized yet. Okay, she just let it go. I'm interested because you noted the Chapter 7, clean slate after
12 months
12 months.
with reestablished credit.
Right. Okay. Is that Fresh Start the only thing that's available for people who were caught up in the mortgage scandal?
That's for anybody who went through a bankruptcy. Now, you're talking predatory lending, that has to
Yeah.
be proved. You need to work with a mortgage litigator, not a modifier, but a mortgage litigator. That has to go to court. And there are some law firms in New York, because one of the lawyers I work with in Pennsylvania, they work together, they advise each other on federal statutes and and different things, but in New York, there are some law firms that are mortgage litigators. And what they do what's called a forensic review of the mortgage from its inception. So if there's predatory lending, they can determine that, and they can determine who's entitled. I have a cousin who bought a home, and she actually worked for a bank. She got hurt and came out with disability. She didn't have nothing else to do but look at her mortgage payment. She saw something that didn't seem right. I referred to her, I said, call my lawyer. She called the lawyer, so right now she's living in a $350,000 house and don't have to pay a mortgage because nobody involved in the transaction can show the court where they're entitled to get paid.
And that's huge.
Yeah.
That's huge.
It is.
And millions of people, you know,
Yes.
are under that.
I had another question. I wanted to go back to the whole life for a minute. What kind of insurance would a person get for themselves if they had like 6 years to retire?
6 years to retire?
To retirement?
To retirement?
Yeah.
And they don't already have insurance?
I mean, specifically me, I have term.
Okay.
And I have long-term care.
Long-term care is good.
Okay.
But term insurance?
Yeah.
Okay.
That's like all I have.
I would suggest you get a base policy of at least $50,000 of whole life with, now, basically you want to look at your income and multiply it by 5. That's my opinion. You look at your income, multiply it by 5, but at a certain age, 50 base because the band rate changes. You pay less per thousand from 50 and up.
You mean 50 years of age?
$50,000 of coverage
Okay.
and up, and get the rest in convertible, attained age convertible term insurance.
Wait, say that again?
Attained age convertible, age convertible,
So you're saying get 50,000
base, whole life. And it has to be a mutual owned insurance company, not a stock owned insurance company.
Okay.
A mutual.
A mutual owned insurance company, not a stock owned insurance company.
So it's mutual owner concept around the
I don't even know mutual.
Mutual fund, I went to mutual fund,
Are they still around?
yes, but they did medical insurance. Their life insurance company is Companion of New York.
Yeah,
Oh, okay.
yeah, I'm with New York Life.
Okay,
But
okay. So you're
this is
saying
the
you have
term
base.
life one, it's more, as you age, it gets more and more, that term life.
Well, term life works one of two ways. Either the premium stays level and the insurance decreases to nothing, or the insurance stays level and the premium goes up till you can't afford it. Only 1% of all terms sold in America with all insurance companies ever paid in a death claim, and that's usually accidental death.
This is a question.
Yeah.
I think we get a young person, about 31 years old, who's making enough money where they can save, but they're not saving. So they're making over $100,000.
Wow.
And
That's a different seminar.
no, I mean, it's in the blender, right?
Yeah, that's,
Financial blender?
Was it,
Yeah.
is that person you?
Yes. No, not me, no.
Okay, okay.
Somebody I know, somebody I know.
Let me
Well-
just address that very, go ahead.
well,
Go ahead.
it's like an alcoholic or a junkie.
Right.
You know, until that person recognizes.
Exactly.
I had a gentleman come in my office, he was 22 years old, he said, Mr. Washington, I gotta get this Mercedes. I said, you don't have to get it. He said, oh yes I do, I gotta get this Mercedes, I wanna buy this Mercedes. I said, well, how much are you gonna pay for it? He said, it's gonna be like $1,500 a month. I said, you don't want this Mercedes. You know, he said, well, you drive a Mercedes. I said, well, I'm a little older and I understand some things. I said, but you don't want this Mercedes. But see, you can't tell, you know, they wanna do what they wanna do, but you couldn't tell me nothing. About 3 months into him getting this Mercedes, he called me. He said, Mr. Washington, I said, yes. He said, I didn't know the first of the month came so soon. Now, with that being said, the other side of the coin is, I would rather pay $1,500 for something I want than $500 for something I don't want. It's hard to write that check for something you don't want. You know, you'll write that $1,500 till you can't.
But she's trying to buy a vet, she don't need a vet.
Oh, no, you don't need a business. Now, let's think about this. You have to do some research. I researched Mercedes before I started buying Mercedes. I buy a 3-year-old Mercedes because all the franchise taxes are gone. I'm buying the deferred cost of the car. I can keep it for 3 years, trade it in and get 100% of my money. So I buy it as an investment. I blew an engine in a Mercedes and still got all my money out of it. But I wouldn't buy a brand new one. I'll buy it 3 years old.
How you get them to save money?
You can't
Let
get
me just address that, and I address it in my book.
Yes.
It is like almost like an addiction.
Right.
And a lot of people, whether they are, whatever the age, and children have told me that they don't believe that their lives are worthy of being financially secure. That spending is emotional. It's to prove their worth. They see things outside of them as having value as opposed to inside. They see of what they have, the kind of bag and the who's the hose and the name and the blah, 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 as having value as opposed to knowing that they're perfect as they are. So in turn, until that inner work happens, then that spending will continue. Because that's what it's solely spiritual and solely emotional.
What I found in my 32 years in this business is that an individual is going to mirror the 3 closest people to them. And that's from 32 years of working in this business. They're going to mirror the 3 closest people to them.
But I also found out, I find that if you do it like set up an automatic savings with your bank,
Right.
you know, you could, talk to that person doing that like $50.
She done bought a house, she done bought a gun, it's just that now, I mean, she's making more money than when she bought the gun, though, she's like, she don't have no money. I was like, what you mean, you don't have no money?
She has money, it's just not allocated and being
She's spending all of it as she makes.
Right.
And that's what I tell clients. I'm not a salesman. I don't sell anything. I provide a service to those who need it.
You mentioned that when they swipe a card, they get like some.
The issuer.
Right, the issuer gets some money, but isn't it against the law for a store to put a minimum?
No.
I thought that was against the law. You have to spend like a minimum of $10.
You don't want to go to another store? No, a merchant can run his business anyway.
because of their charges, the company is charging them to use that, so it passes on to you.
Because I thought that was against the law at one time. Oh, wow.
Yeah. Anybody self-employed? You self-employed?
Just starting out,
Are you an Inc. or LLC?
about to be LLC. Like I said, it's the baby's brand new.
Okay.
Congratulations. What's the name of the business?
Common sense.
And what do you do?
I show people how to manage their paychecks better. I'm not on your level in terms of teaching about investments and stuff like that, but just really teaching people how to manage their paychecks better, pay their money on time based on their particular situation. So it's not really a matter of how much you make, whether you work in the supermarket or whether you work for the post office, just teaching them how to understand what they do within their little confines, and then after that, hopefully they go to the big boys like you.
It's not how much money you make, it's how much money you keep.
That's right. We'll have a conversation.
I have a doctor who makes over $1 million. I have a cashier who makes around 28 something at Walmart. They both have 4 kids, and they both take their 4 kids to Disney every other year. So it's not how much you make, it's what you do, what you got.
Can we just, in the final minutes that we have before you can come up and meet Mr. Washington personally, talk again about negotiating negotiating with creditors, because everyone.
Run right down the credit report, finish it all up.
Yes.
Okay.
How do you negotiate with the creditor? Everyone has a creditor probably.
You don't verbally negotiate with a creditor. Everything's in writing. But you pull your credit report. You start from the top to the bottom. And you want to look at your spelling of your name, dates of birth. They list your social, mailing addresses. Make sure you lived at these places, employment. Then you want to look at the list of subscribers. Did you ever do business with the subscribers listed on your credit report? Are the payment histories correct? Are the balances correct? If you see credit reports that list the balance but not the credit limit, you may have a little issue because the computer could be reading you at 100% of your credit limit on revolving accounts. And you don't want that. You want to get an accurate reading on your open balances on revolving accounts, because under the credit utilization, the smaller the balance, the smaller you're using of the total limit, the better. But if it doesn't see a limit, then it may be reading it at 100%, which could affect your credit scores negatively. Then you want to go all the way down to the public records to ensure there's no public records on your credit report. It shouldn't be public records on a personal credit
What
report.
does that mean?
If someone sued, if you got sued, if you had a lien on your judgment, taxes, that shouldn't be on your credit report.
Why?
Right.
Because it's in violation of the Fair Credit Reporting Act.
Is that right?
Yeah, Equifax was actually sued. I was part of the class action. I got a year's free of monitoring too. That's all I got. The lawyers got the money. The last thing you want to look at is the inquiries. Because you want to make sure that's one of the key indicators if someone may be trying to use your credit. If you start seeing inquiries at locations you know you didn't apply for credit, that may be a key indicator. The only time you may be fooled is if you went to a car dealer and tried to buy a car, let the car dealer look for your financing, because they do something called shotgun. They may hit 16 lenders and each lender will pull your credit. So you walk in there with a 700, you come out of there with a 560. You get your car, but your credit's shot after all those inquiries start dropping your score. Pretty much after that 5th inquiry in a short period of time, within that 30-day period, you can lose 3 to 9 points for each additional inquiry, unless you're shopping for a mortgage. You can have 1,000 inquiries within 45 days, it counts as one. Yes.
This is important. I thought that you would talk more tonight about your credit, how it relates to finding employment or job opportunities. Could you speak a little bit about that before you wrap up the rest of the seminar? Because that's important, because that's initially what we were told.
No, it's great.
That's great. Exactly.
Yeah.
I'm finding that to be relative in certain fields. Like in the mortgage industry now, if you can't qualify for a mortgage, you can't work in the field of giving people mortgage. It's in the field of financial services, and banking, and even in insurance. I just got grandfathered back into New York Life because I had left, and that whole list of questions, about your finances. In the police department. Police departments are very skeptical. I can't get the word out.
Skeptical.
There you go. Of people with poor credit profile, because it may make them
Susceptible.
there you go, to bribes and things of that nature.
Yeah.
So
It is a shame, because a lot of people, just because you have a low credit score, it doesn't mean that you're a thief. But the financial industry, look at that. I work for a fully NAACP from Merrill Lynch, and you have to have, they look at you as a possible person that will set up a fake account and will steal if you have a lot of financial debt, if you have a low credit score, which is a shame.
yeah, so
Or dealing with
Because I won't pay off
sensitive,
your debt, you can't get a job.
or dealing with in law firms with handling sensitive
Sensitive
materials.
Right,
It
exactly.
just shows it's your integrity,
It's the same.
your willingness to pay back a contract that you entered in.
See, what they do at my job, and I noticed this, see, they do annual, we have to fill out a form. If you have any judgments against you, if you've been arrested, everybody just have to go down the line, and you have to be honest, and they take out fingerprints annually now. They find these things out. When they do the round of layoffs, you'll find your name in there. You know, they do that.
And I have clients with security clearance, work for government with security clearance.
Right.
Every 5 years, they go through a review, and their credit is part of that review. So every 3-4 years, I know the same people coming back because they know that their credit's going to be reviewed.
So is it against the law or not for a person who is applying for a job for that prospective employer to do a credit check and maybe not hire that person based on the results of that?
Well, most
How does that work?
states is called at-will employment. So if they see you on Facebook and don't like the way you look, they can say no. But the credit thing is
You
just,
know how the application says can we do a credit check?
Yes.
Right.
Yeah.
So you have
But
to-
you have signed it though.
Right, you have to
give
Right.
authorization.
position, right,
Right.
or not, yeah.
But the credit is very important, but it's also your finances. They go together.
Right.
I know we only got a quick minute, but I have a client right now. When she came to me, she was out on disability. She got hurt on her job, working for the post office. She was on disability. Her husband asked for a divorce. Her sister got hooked on crack. She had to take in her niece and nephew. So her life was just falling apart. Fortunately, she got divorced and got child support for her son. for her daughter, and she got some kind of subsidy for the 2 kids, the niece and nephew. She got a job working for Blue Cross. She won her lawsuit against the post office, so she got the back money, her back pay, and another settlement, and they had to give her job back.
Wow.
She had a 485 credit score. We had her doctor records. Got her a mortgage to buy a house in Swedesboro, New Jersey, and with a 480 credit score.
Wow.
But I was able to document why her credit. And FHA actually wrote a letter saying that this is what the program, this is the person the program was designed for. I had a gentleman who mother said she had to ask the drug dealers 3 times to get off the steps before she can get in the house. He grabbed his baseball bat, ran outside to clear the steps. Cops just happened to be coming. He go to jail for 2 years for attempted assault and battery. While he was there, he was working for a wood shop in jail. He came out, he still worked for the wood shop. I was able to use his 2 years of employment in the prison and his current pay stubs to get him a mortgage, even though he had like a 520 credit score. So your credit is important. That's why I say I have 2 categories, those who can't and those who don't. Both these 2 people were in situations where they couldn't do anything, but because they had the income and they had the documentation, we were able to overcome these things. So you can overcome anything. No matter how bad your credit is today, you set up that budget at 10, 10, 10, 35, 35. You start paying off your creditors divide that by that 35%. And if you're patient, within 2 years, no matter anything else, you're going to have a 700 credit score.
So I just want to make sure that her question is answered, that it is legal that an employers require you to submit to a credit check in order to be considered for employment.
It is legal for an employer to ask you to authorize them to review their credit. You can say no.
Okay.
You won't get the job. Now, you can call the 3 credit bureaus and put a freeze on your credit report.
Oh, okay.
So you can give them authorization, and they won't get any information. They may think something's just wrong with their system.
It doesn't always be.
But also the landlords also require credit checks.
No
Yeah,
matter
we
what.
just
Turn the
So-
people down for apartments and.
Right.
And rent stabilized,
Yeah.
exactly.
Now, the
yeah.
there's a landlord bureau. So
Yes, there
they view that. Some may not go directly to the 3 credit bureaus. They may go under that landlord review to see, just like banks check you out through check systems, which is not on the credit report.
Someone too, I saw 2 hands.
Yeah, okay.
Yes, okay.
All right, Mrs. Washington, you said about the 35, 35, 35.
No, 10, 10, 10.
Oh,
What the other ratios
10,
mean?
10, 35, 35.
10%, depending on your faith, your religion, your charitable
Right.
spirit, tithes, offering, relief for the poor. 10% you save for the future. I always split that with my clients, 5% into a mutual insurance policy, 5% into an annuity. 10% you spend on yourself. 35% covers your household expenses, mortgage or rent, utilities, car insurance, child care, because car insurance is repetitive. If you spend more than 35% of your bring home pay for your living expenses, you're living beyond your means. If you spend more than 35% to retire consumer debt, you're living beyond your means. People create debt and then try to budget their money to meet it. You create income and then put your debt within it.
Right.
And this is the same budget God gave to Abram.
I just want to say something, and this will be maybe the last thing.
Don't let her speak.
Okay, no, the last thing that I want to talk about real briefly. I am a product of a working class family, right? But my parents, they didn't grow up with parents who educated them or taught them about matters of money and finances. So, as a result, I suffered and I was uneducated back then when I was in college and I took out loans. And I want to know, between yourself, Ms. Lynn, and Mr. Washington, I know you're working with the youth, so you're probably already doing what I'm about to say. How are we telling our parents and elders and how to help our children in advance before they become too educated, so before they go to college, on what to do in money matters, and so that they won't get into what happened to me, because that's why I owe now, today, college loans, because I had no one to teach me, to tell me anything about, oh, Jamie, don't take out a loan. But thank God, I'm a mother now, and I have a daughter, she just graduated recently from college, and I was literate enough to tell her, Mommy, don't go taking out loans. Become, if you can, get a scholarship.
Right.
Educate our children on
Right.
making sure they keep their GPAs up, because there's no reason for you to really take out a loan if you don't have to.
Right.
Your parents can maybe have low income, but you, the child, if you're smart enough, you can, so many things will be offered, and that's what happened to my daughter. We didn't have to pay any college tuition.
Right.
You know, so I'm wondering what you all are kind of talking about, so that our children in the future don't get into these.
Well, I mean, we graduated, World of Money Youth Financial Education Institute graduated 125 children in August. We started at age 7. Children understand this. They
I
understand.
don't know about what's happening here in New York City. I don't know what's going on.
Well, the children are here in New York City.
Okay.
Right. We're here in New York City.
Okay.
And there are more that we need to serve, and we're registering children now. Just go to worldofmoney.org. But you know, children, we can't go in the house and kidnap children. The parents have to allow them. So please spread the word that we're enrolling now for our July Institute. This is urgent.
It is.
It's an urgent issue. And what you don't know about money will hurt you. And I remember seeing a gentleman on 60 Minutes, and he created all the fine print written on the credit cards that we use, or the debit cards that we use. And he said, I know you're not going to read it. And it says in there about the quadruple interest in a month, or whatever it is. You know, and I've put one-page documents in front of adults and said, do this computation and sign this, and they will. And then in the fine print says, by signing this document, you owe Sabrina Lamb every nickel you will ever earn in your life. Why would you do that, I asked them. Adult, why did you do this? And so I would, you know, our collective work, this chapter of the NAACP, and I forgot to mention that Mr. Washington is a member of the NAACP in Philadelphia, right? And so this is an urgent issue, and if we don't lean into this conversation, we will continue, decisions will be made about us. You know, about us. And what you don't know, you just don't know. And that's it.
I know that the speakers come from Pennsylvania, Philadelphia, and I reached out to the Financial Policy Center in New York. I was trying to get them to send someone to speak, because they are free. They do counseling, they control and everything. They have branches all over the city that you can call. So if you would have a problem with your credit, they will speak to you, they will counsel you. So this way, one-on-one services. So this way, we would ask you how to claim your credit. You just could go to them, and they will help you. So I was trying to get them to speak, but they sent this to my office.
We want to,
And you want to
now,
say this?
oh yes. We also want to thank Ms. Sabrina Lamb, who is also part of the Economic Development Committee, for introducing to us and bringing to us Mr. Darell Washington. We want to thank you very much. Now, Ms. Lamb has books over there. We're talking about educating the youth. Do I look like an ATM? It's a very excellent read, and it will help you talk to your children about financing. We're going to have the Q&A, the individual.
Yeah, if you like to, and then we'll.
But in the meantime, we're going to bring us some little audio food for you. We want to thank also, there's so many people to thank tonight. We want to thank Mr. Don Smalls, who is doing the Holy a member of Canaan Baptist Church, who is the photographer par excellence. Thank you, Don. Thank you. So, without further ado, we thank you so much. We're so happy to see you, and we're so happy that we were able to share this information with you.
Thank you for coming.
Oh, one other thing. On March the 22nd, there's going to be a prize given out here. The Economic Committee of the NAACP is going to have a tax preparation day right here on Saturday, March 22nd, between 12 and 4. and this is between the NAACP and the IRS, and they will be able to file your income taxes and electronically file them from right here. Income, $55,000 or less. Bring your identification, social security card for information, and they go from there.
So do you also do self-employment? Or that's just
They don't do self-employment and they don't do investments.
Okay.
And share this with your friends. Share this with your friends.
Yes.
Come meet Mr. Washington, have some hors d'oeuvres or whatever things